Welcome back to all our listeners for Investing in Gold for a New Generation. This is our fourth episode called The Aftermath of the 2020 Election, brackets almost. My name is Rafael. I'm here with Steve. How you doing, Steve?
Awesome. Doing great.
Cool. So today is November 6th, 2020, 3 full days after the US presidential election. And we still don't have final results. Um, as of today, as of right now, Biden is with 264 electoral votes and the leader of majority votes. Trump is with 214 electoral votes. Biden is in the lead for most remaining states, such as Pennsylvania, Nevada, and Georgia, and only needs one of those states to win the election. For the Senate, we're pretty much tied with about 46 for the Democrats and 48 for the Republicans. And for the House, we have about 212 for the Democrats and 194 for the Republicans. Just a little bit of a recap of our last episode, episode 3, where we discussed, I think about 10 or 7, a week before the election, of some of the scenarios that could happen based on the outcomes of the election. We spoke about what would happen if it was a full Democratic sweep, what would happen if it was a full Republican sweep, and what would happen, if we had different combinations of half and half. Based on what we have seen after the election, the facts that I've just stated, it seems that we're at that half and half stage. Biden is more likely to win the presidential position, while we still have a little bit of a tie position in the Senate, and then a little bit more towards the Democrats in the House. So the first thing we want to talk about today is what that means in the short term for gold. Steve?
Yeah. So, and I'm glad you mentioned short-term for gold, because I think long-term, the gold bull market is still going strong. And I think, 5, 10 years from now, gold's at a much higher price and we've done really well in gold. So that long-term, nothing has changed out of the election. Short-term, it's, the scenario of the sweep for the Democrats or sweep for Republicans, they haven't played out. If it had been a sweep for the Democrats, we were talking about, speculating about double-digit trillion stimulus, probably significant inflation a year or two from now. That is pretty much off the table because the Senate is still pretty split. I think that's going to limit how much Biden can do. We don't know, as you said, if Biden's going to win, but if you look at the sports betting on the U.S. election, the odds are dramatically in favor of Biden. If you want to bet on Trump, if you still think Trump's going to win, you could probably make 10 or 15 times your money betting on Trump right now, because it's such a long shot that Trump would end up winning the election. Having said that, there's still going to be debates for months and bitter disputes. And, for those people that remember the 2000 election, when they were literally going through the Florida ballots one by one and saying, hey, is that vote punched out or not, and deciding whether that's a legal ballot or not. There's still going to be lots of that discussion. But I think we should operate going forward that Biden is the president, but it's a split Senate, and that limits what he can do. So it's really, for gold, that's a neutral, slightly positive scenario for gold. That, Biden, generally the Democrats are going to push for more stimulus, be more aggressive deficit spending, put more pressure on the US dollar, things like that. That's going to help gold. But it's somewhat neutral. And we've seen gold, since our last podcast, gold is up maybe $75, $80. So that's kind of in the realm of reasonable reflection of the outcome of the election. So short term, I think, we're through the election and, we've seen a bit of a bump up in gold, but I don't think, it's really a sign that gold necessarily is going to all of a sudden shoot up $200 or $300 in the next few weeks. And yeah, it's fairly neutral at this point, but long term, still everything is pretty positive. You know, the tectonic plates are still shaping up to be in gold's favor for many years, I think.
Good. So last time we also spoke about the fact that if it was a complete democratic sweep, we were likely to see uh, an increase in capital gains tax.
Mm.
So now, once again, that it's a mix, that might not be as likely. And one of the things that you mentioned, if that happened, was that we might see a big sell-off in the market, and that might create a huge opportunity for gold investors. That's not as likely anymore. But can we see in the short term for gold?
Yeah, so that's great, a great point, Raphael. So yeah, I think the potential for a huge sell-off is much lower now because, you know, again, it was, you know, with a split kind of government in the US, they're not going to get really aggressive on raising capital gains tax, and people are going to try and avoid that by selling everything before the end of the year. Now, it's still possible that people that, you know, view that Trump is the right president for the US say, oh my goodness, I'm worried about everything. I'm going to sell things off. But I think there's less likelihood of that scenario. But what I'm starting to see is, you know, most of our viewers are medium long-term investors, but there's a lot of people that participate in financial markets that are traders. They're trying to make a lot of money in a short period of time. And I'm starting to see a lot of traders, when I look at talking to traders or seeing what they're saying online, that they're getting pretty aggressive. It's like, oh, we're through the election. I don't have to worry about risk. I'm going all in on gold. I'm going with leverage, super aggressive. And when you start to see that, it, you know, it's no guarantee, but that does create a lot of risk in the market. If you've got traders and speculators throwing a lot of money and a lot of leverage, you know, that can get that initially 50, 60, $70 rise in the price of gold. But then if there's some bad news for gold or anything, the market starts to go down. It forces some of those traders to sell. That forces more people to sell and more traders to sell. So there's still the normal volatility that we see in gold. You know, one of our first podcasts where we talked about taking advantage of volatility, that's still at play. You know, it wouldn't surprise me if we saw, you know, a normal $100, you know, maybe $150 drop in the price of gold just from that aggressive speculation and risk that is in the market. I'm not as worried about a big sell-off now, but always be prepared to take advantage of that volatility. Long-term things look great, but short-term you can get this insane volatility in gold. So still be ready to take advantage of it if you want to add to what you have invested in gold.
Awesome. So basically what you're saying is that there are these traders who also believe perhaps that there is a good market in gold right now and maybe in the short or long term. And so what they're trying to do is take advantage of it by and making the most out of their time by leveraging up. And what they're doing actually is they're leveraging very high. And if we see any negative news about gold, we might see bigger drops or big drops in the price of gold.
Yeah, that's precisely it. And you know, one thing that this is an important point for our viewers. You know, when you watch the news, you always see, oh, investors got it, you know, are excited about this, or investors are excited about a Biden presidency, and that's why the market's up. It's not really investors doing that. It's the traders and the speculators. They're the ones that are like, hey, let's try and jump in and get in before the market goes up, and they get aggressive. And then there's other speculators that get a little more confident. And so it's the speculators and traders that create that enormous volatility. So that's is still at play in gold. And again, I feel like that's maybe getting a little too aggressive right now. So, and usually when it gets pretty aggressive, there's a, you know, 2/3 chance that we do get a sell-off. So just just be ready for it if it happens. Yeah.
Perfect. I think that an important note for our viewers is that this kind of game for the traders is going to go on for the majority of the bull market.
Yeah. Yeah.
And so therefore we will see a lot of volatility over the bull market. Long term, we're still expecting the tectonic plates to act in a way where we will have a gain in the gold market over a longer period of time. And so I just wanted to emphasize to people not to focus too much on the short term. Aside from, if you still believe that gold is a good fundamental investment, take advantage of volatility. But seeing huge drops in the price of gold does not mean it's time to get out. Maybe not just yet.
Exactly. Yeah, you said it beautifully, Rafael. That's keep your eye on the long term, and as you've told me, it's so often when you talk to people about investing that they focus on the short term.
Yeah.
And if you're a trader, yeah, you want to focus on that. But if you're investing for the long term and you want to make sure your portfolio is protected for the long term, don't lose sight of what gold and gold mining stocks can do for your portfolio. And it only takes a small amount. Stay the course, no question, stay the course. And we're going to see these short-term swings. And all we want to do is take advantage of them, not let them influence our long-term views.
Cool, thanks. So exciting time for our podcast. We have our second question. Yeah, exactly. This question is about options and futures. So we have a new investor, someone who hasn't been investing for more than a year, but he's very interested in futures and options, and he wants to know if gold is a good asset class to kind of play around with those kinds of investment instruments, and if so, how? And he wants to hear you talk a little bit about that and learn more about it.
Yeah. So I think for our viewers that are mostly focused just on long-term investing, they don't need to keep listening. But for those that are interested in trading or options and futures in general, that's what I'll get into here. So it's really interesting. I mean, I personally have used options and futures in gold trading. In the gold market, futures are huge. A lot of that volatility we see is traders operating in the futures market. So I'm going to first talk about futures, and then I'll get into options. So futures, for those that aren't familiar with futures, it's not really about predicting the future. It's simply the term they use for these instruments where you're able to take enormous leverage. So if you look at gold today, you got a point?
What's enormous leverage?
Yeah, so enormous leverage would be, let's say normally you invest in gold. If gold goes up 10%, you make 10% on your money. With futures, you could leverage up to, if you wanted, 20 times. So if gold went up 10%, your investment would go up 200%.
Ooh.
20 times 10%. Okay, now that's extreme leverage, but maybe you go 4 times leverage. And that's great. Imagine we had a scenario where gold went up, let's say it tripled in this bull market. We went from, $1,700, $1,800 to $5,000, just as an example. That's 200% gain. If you could multiply that by 4 or 5 times, instead of a 200% gain, you're getting 1,000% gain. So that's huge, right? Doesn't that sound awesome?
Great.
But the downside is if gold goes down 10% and you're leveraged 4 or 5 times, you lost 50% of your money. Okay, and that's where you get these traders get too aggressive, and all of a sudden they're losing enormous amounts of money and they're forced to sell. So futures, it's kind of like, it's not quite the right analogy, but back in the days of long-term capital management, the big blow up back in the 90s where this hedge fund had lots of leverage, they blew up. They went from $5 billion to basically nothing in a month. And there was a funny line where they said, all they were doing was picking up nickels in front of a steamroller. Or another analogy would be with futures is you're making lots of money, but you're sitting on dynamite. It's like you got to be really, really careful with futures. Now, a new investor, I wouldn't really say futures, but if you're someone that's maybe learning about investing and your goal is to be a trader or to work in the investment industry, it probably doesn't hurt to play around with futures if you're going in recognizing you could lose a lot of money in them. There's another famous story. Jim Rogers says, if you want to learn about investing, you can't learn about it in a textbook. Go and invest in some wheat or gold futures, and you're going to learn pretty quickly about all the risks and emotions and greed and fear that can come into play trying to use futures. If as far as the strategy, which again, very few of our listeners would want to even attempt something like this, but again, you'd want to take advantage of volatility where you have a big sell-off, or what a lot of futures traders do is you have the markets going up and you have a little sell-off, maybe 2 or 3%, buy there, and that's generally a sign the market's strong. A little bit of a sell-off scared out a few people, buy there, and then it keeps ratcheting up like that. That's a strategy used. But if you're using futures, you've got to be able to say, you know what, it's time to get out. Markets kept falling. I don't want to risk my whole portfolio. And you got to have a stop loss on that. So that's starting to get more advanced. If someone wanted to try it, I would say, look, maybe start with, a small percentage of your portfolio. Start with, maybe let's say you had $30,000 saved up. Maybe take $3,000 or $4,000 and play around with futures. If you can, to some extent, you need a certain minimum amount of money to play that area. But you could start with that and just realize you need to learn a lot. It's both, being able to control your emotions, being able to control your risk. So that's the futures market. And again, what's interesting about it is a huge driver of the gold market. There's billions of dollars of gold traded every day in the futures market. So it is a useful market to understand, but be careful. Okay, so that's futures. Options are very interesting because if you're buying options, you pay a premium and you can make a large gain. And your risk is limited to your premium that you pay. So they're much better than options as far as controlling your risk. If you're long options, if you're selling options, that can be a very risky game. But if you're going long options, you can control your risk to the premium you pay. But the trick with options is there's a time component. Those options will expire at some point, a month from now, 3 months from now, 6 months from now. So the trick with options, they can have enormous payoffs, and I've used options in gold, and they can be amazing. But here's the trick with options. With options, you've got to not only get the direction right, is gold going up or down, you also have to get the timing pretty right. Like, is gold going to go up or down in the next week, in the next month, in the next 6 months? So that's really tricky. The third thing that you have to get right is, options get more expensive as the market is bouncing around. Okay, so you've got to be able to buy those options when that inherent volatility that's factored into the price of the option is lower than the option volatility going forward. So that's a little more of a complicated subject, but you've got to get three things right with options. So it's like in horse racing, it's like getting the trifecta, picking first, second, and third, and getting, not only the top three right, but the order right. Right? So with options, you've got to be really, really right in order to make a lot of money. Okay. The fourth thing with options is, even if you're right, you've got to figure out the time to close out those options, which is extremely difficult. When you're you know, with options, you can make 2, 3, 4 times your money in a very short period of time. But to get to say 3 or 4 times your money, you have to go through 2 times your money, 3 times your money. Should I stop there? Oh, you know, it's up, it's down. So psychologically playing options is also very hard. So again, if you want to learn, like, you know, if you're looking for a career in the investment industry, it's very fascinating to look at options. They've certainly become really famous. You know, if you're a fan of Reddit and Wall Street Bets, you know, there's all sorts of people talking about options. It is something useful to understand and learn about, and you're only going to learn about, really understand it by getting into it and doing it. And so it's something that's worthwhile. And you may recall in some of my university courses, I give people ability to pick their portfolio and maybe buy some options within their portfolio.
Yep.
And so it is a way when you've got some money or some marks on the line, you can learn a lot about different types of investments. So I think, long story short, if you're really interested in that, you could start with a small amount of money. But you're going to need to learn a lot about controlling your emotions and risk management in order to take advantage of them. But again, you can learn a lot from tinkering with them, but be very, very careful trying to put too much money into an instrument like that.
That was very interesting, for sure. Although these kinds of instruments aren't usually the types that people who are our viewers are listening to, this still is a good subject to know where the volatility of gold comes from. A lot of the daily volatility comes from futures and options.
Exactly. And that's, again, you know, when you go to TV and they say, oh, investors are excited about this or investors are worried about this. No, it's not investors, it's speculators. Speculators that can use a lot of leverage, and they can force the market up or force the market down. So that's really, it's the traders and speculators that produce that volatility in most markets, but particularly in the gold market. Absolutely.
Awesome. Thank you, Steve. So that's our episode for today. Anything else you want to mention?
No, I mean, we're probably going to touch on the election a little bit in future episodes, but I'm looking forward to maybe moving past the election and into other topics, because I think there's lots of fun topics like gold mining stocks and owning physical gold, many things. Hopefully we can spend a little more time on now that we're slowly inching through the aftermath of the US election.
Perfect. So yeah, our next episode is going to start covering gold mining stocks. It's a bit of a big subject. There's a lot to talk about, so we're definitely going to do it over a couple of episodes, but this is kind of where we're going to. Awesome. So thank you very much, Steve.
Thank
Goodbye.
you.